welcome to Finextra. I'm Hannah Wallace, and today we're at the TCF 2018 event in Dublin. Joining me now is Craig Focardi from Celent and Adrian Hadley from Temenos, and we're talking about origination and onboarding. Gentlemen, thank you very much for taking the time to speak with me today.
Thank you.
Thank you.
Craig, coming to you first, why is ordination and onboarding so important to banks, and how do you improve this?
Account origination and onboarding are really the lifeblood of the company. Loans generate the revenues and the profits that drive the retail bank, certainly, and very much a large segment of the whole commercial bank as well. And certainly onboarding deposit accounts is critical to acquire low-cost funds to fund those loans. And so it's really a big profit sector for the bank. And then, secondly, in today's world, account origination and onboarding, the bar has been raised. New competition from fintech startups and neobanks are really challenging the way that traditional banks need to run their businesses. And so having the same technology and trying to continue to do well is just much more difficult. And so financial institutions need to upgrade their software in order to be able to onboard better. And finally, the customer is really key here in account origination and onboarding. When you're starting those processes, you're trying to develop new relationships or expand the existing ones. And so you need to continue to do that better, faster, and cheaper in order to satisfy those clients and bring them on board. And so, I like to say that the account origination part is sort of the courtship in the relationship with the client, and the onboarding is also critical because it's sort of the marriage, it's the long-term relationship. And so how you link those two together and link the front-end digital engagement with the client and put that data seamlessly into the back-end core banking system is really critical, and that's what makes those two things very important.
Okay, and now Adrian, coming to you, how does this link to banks' digital strategy?
Well, pick up on some of Craig's points there about the competitive nature of the market now, with so many more players offering financial services, particularly in the lending area, and customers' propensity to have multiple relationships with financial institutions. So there's lots of opportunity out there for challenger banks, and of course for the existing incumbents to attract new business, and by attracting that new business to start to gain wallet share. We live in an age where everybody searches for everything on the internet. Nobody goes shopping anymore, and that's the same with financial services. So really, your digital strategy through internet banking, through mobile banking, is the biggest source of customers. With falling footfall in the branches, people go to the internet first to look for a product. And if you don't have the right offering, and if you don't have the right user interface, the right tooling, then it's just too easy to go somewhere else. It's just another bank is a click away. So it's absolutely critical that you have a digital onboarding strategy that, of course, is multi-channel, that's omni-channel, so that I can move between those channels. And if I really want to go into a branch to follow up on something, I can, without having to explain to everybody what I've just done. Somebody can pull up my application, can review it. It's vital. People just don't want to wait anymore. So it has to be fast and it has to be digital.
I would just add to that, if I could, that with respect to Adrian's comments, those customers too today want the bank to know who they are, and that's a really important part of it. And so it's not just getting on there. And so for an existing customer, they want customized offers. They want the bank to use the data that they have. So it's not only the front-end tool for the non-clients, but the existing client wants that process to be easier for them because they already have the relationship. And so if the bank can pull data out of the core system, if you've got T24 linked to the account origination product, then you can deliver customized offers and relationship offers and prices to that. And so the technology to link that and bring that out to the front office is critical.
All right, and what options do banks have to look at new technologies and ways to handle the ordination process?
Really, they have multiple options. You can either have a standalone solution in the front office, where you have to rebuild all of your product parameters. You have to do lots of integration in terms of getting that customer data that we were talking about there, making sure that I make the process for customers who are already a customer of the bank as easy and as seamless as possible. So that is one alternative, but that's kind of like the hard way to do it. Our belief is that the best thing is to have an integrated front to back solution, so that for existing clients, I already know who they are. If they want to buy a new product, I can make that supremely simple by defaulting all of the information. Why would I ask you about your address? You're a customer of the bank, I know that stuff. Why would I ask you about your income? I have your salary, I have your proof of ID. So we think integration with the back office, with a centralized product catalog, with a modern front end is the key to doing that. And the days of people buying point specialized solutions for origination are really coming to an end, and it's back to that concept of being ready for the digital world, everything being built around a digital core, not just digital interfaces in the channels.
Another way that account origination and onboarding link to IT strategy is, IT wants to be able to create, reuse technology, use it across lines of business and across products, and they need to be able to change it quickly to meet the demands of the business. And so if there's a new product in the market, there's a change in the market, and you want to do that, banks need a flexible solution that can have that done quickly. And so in account origination, if you can put the programming in the tool and have end users use that tool to create products on the fly and then test it, you can really accelerate that product development cycle and get the product out to market sooner. And so it saves the IT department a lot of money to do that, and by getting the product in the market out before the competition, you begin to generate revenue and new clients more quickly.
That integrated approach is really critical there in terms of time to market. If you launch a new product, you have to define it in your back office. Then if you have to redefine it in your front office, that's additional work. And it's highly likely that the two catalogs don't correspond. There's a lot of testing to make sure that the calculations in the front and back work exactly the same way. With an integrated solution where you're running off a single set of product definitions, you don't have to do that. You just define it once and you're good to go. It's very, very much faster to get a product to market in that type of environment than it is if you're using multiple systems and a different origination and different channels.
All right, and finally, what benefits does this all bring?
We did talk about a lot of the benefits there, but if you think about a bank, they need to build technology, not just today, but they need to really future-proof the bank for tomorrow as well, because the pace of change in technology is coming so quickly and it's so dynamic that you need to install tools so that you can roll out a solution much more quickly within the environment. So I think that is a huge competitive advantage, particularly with new entrants coming into the market from other sectors of industry outside of banking. I think that's really critical. It's a huge, huge benefit. And the bottom line benefits are if you can link the product offers and the pricing out to the end customer and link it to your relationships with them, and you can do that more efficiently, you're going to improve your efficiency ratios and your revenues and your net interest margins, and that's going to improve the bottom line of the bank.
Gentlemen, this has been great. Thank you very much.
Thank you.
Okay.
And thank you for watching.